Good afternoon, everybody. Welcome to your Wednesday edition of the TraderMerlin show. Today, we're going to do a little bit different, as you guys have probably seen from the title card that I had up there earlier. We're going to start things off talking about kind of my top 10 crypto that I would hold for the next 5 years. I know it seems kind of a weird question, but I'll get to that. And then I'm going to go through, after that, what happened in the markets today. I did open up some short positions on S&P 500, bought some puts today. I'll explain why, and we'll run through all the charts. So get your questions in, and let's get rocking. Now, today's show was pretty much driven by your comments. And you guys know, I don't have anybody telling me what I can or cannot do. This program is not tied to anybody. I'm not paid for by any sponsors. I have no school or organization or entity telling me what I can and cannot talk about. So I am pretty much at your mercy. And if you guys have questions or things you want me to cover, it's very simple. Just go to any YouTube show, put your comment down below there, and I will answer those questions live on air, just like I'm going to answer this one today. Now, I kind of went over this before, but KF apparently missed the show. Now we'll have something easy to direct him to because he's not a regular listener. Every now and again, he jumps on and off. He says, would you be kind enough to answer the question that I asked several days ago, Merlin? More than a month ago, I asked you to name 10 currencies. By the way, I've done this twice for you, KF, so this is now something I can just point to every time. What are your top picks? Seem to have a good future, strong fundamentals, blah, 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 blah. Okay, that leads me to this right here. The top 10 cryptos to hold for 5 years. Now, my big issue with crypto is I think most people believe it's a pump and dump scam. A lot of it's fraud, and you're right. It is. A large part of crypto is scams. Most of them are just pump and dumps. In the Crypto Investor Live program that I created for Online Trade Academy, we show you how to create a crypto in under 7 minutes. 7 minutes, I can create my own cryptocurrency, name it whatever I want, issue as many coins as I want, and now I just have to go out there, create liquidity for it, pump it, and hopefully make a bunch of money off it. Unfortunately, or I guess fortunately, I'm not a scam artist, and I have no interest in fleecing people for money and just to make myself wealthy, so I wouldn't do that. However, there are tens of thousands of projects that are doing exactly that. They're bullshit products, they do nothing, they serve no purpose, they're an absolute scam, but people buy them because some Reddit, Wall Street chat room, or some YouTube channel told them to buy it. So I'm going to walk through my 10. And the reason I have these 10 is it's important to think that crypto represents a fundamental change. If we look back at what the dot-com bubble or dot-com change did for all of us, our lives are so irreplaceably different now, from being able to do everything from my cell phone, whether I want to check email, FaceTime my family and friends, get my stock quote updates, write a blog post, just draw pictures. I can do everything from my phone, and I'm connected pretty much anywhere I go. You go back to the late 90s or mid 90s, that really wasn't the case, right? Things have changed. Landline phones, those long, curly phone cords where you tangled up and everything would drive you nuts. So I'm really focused on, with crypto, what are the technologies, in my opinion, that in 5, 10, 15, 20 years will be as significant as the internet was back in the late 90s, right? In the late 90s, it was not significant. It was fledgling, and then it morphed into what it is today. And, I'm kicking myself for not holding a huge portfolio of dot-com companies in the late 90s. I'm not making that mistake again. So I have a portfolio right now of about 39 different ones. And I went through and I kind of picked out the ones that I think out of the top 10, which ones, in my opinion, have the greatest prospects, are most likely to be around in 5 years, and have products or services which may ultimately change the future. Now, some of you may not understand what I mean by change the future. It's something as simple as money, right? We could have a change in the way that we conduct transactions. Right now, we have so many old school systems where they're using physical cash, which is dirty and easy to counterfeit. We can get rid of that by using digital money. We can also transfer money much faster. I will not have to use a bank. I can actually go around intermediaries and save myself all the fees and latency that they add to transactions. That's just the monetary side. As far as database management, I can now track products, services, logistics, supply chain, all of that in a matter of a fraction of a second, whereas it used to take weeks or months with current database systems. NJ says Swift is old. Yes, Swift is an archaic system. For those who don't know, Swift is pretty much what the banking system uses. If you want to send money around the world, you got to go use Swift. It is a joke. It is so old school, it's so slow, it's so efficient, unreliable, yet we still use it today. It's time for a change, and this is something that products like Ripple or Stellar Lumens are looking to replace that. Just technology changing a face of old school systems. So you've got money, you can have payment networks, you can have database management. You can also have core layer 1 technologies, meaning database chains that other projects can plug into. That's what Ethereum is. It's just a giant database which keeps track of all the transactions and assets, but you can plug your business directly in there and use their computer, if you will, the Ethereum virtual machine, and make transactions there. So the scope of this is absolutely massive. It could impact the real estate market, which I've always said is slow and archaic. You go to buy a house, you're lucky if you get out of there in 30-day close. But if all the things are in the smart contract and all the conditions are met, you could have a deal done in 60 seconds, as long as it's all recorded on a blockchain that's immutable. You could have things like Airbnb, could all be done decentralized, getting away from things like Airbnb who charge a ton of money, and it's just, in my mind, it's a ripoff. It's convenient at times, but most part, I'd say it's a ripoff. You could look at things like identity. You could actually have your identity on a blockchain and therefore no longer need to present all these documents every time. You just give them your private key and they go, oh, okay, we know who you are. Done. You're good to go. You're clear. Pass on through. So I could go on and on about the advancements of technology and why I think this is going to change the world. But we could just have to wait for 5 years. So let me start this off. KF, this is for you, buddy. Top 10 cryptos to hold for 5 years. Number 1 is real easy for me. There's no question here. My number 1 is Bitcoin. Now, the main reason for this is, and I'm not going to spend a ton of time here, guys. Again, I have a crypto program I teach for Online Trading Academy. Cameron and myself teach 2 hours a week for this live. Cameron does Tuesday nights. I do Thursday mornings. I also do a digital assets program. And there's a free crypto program down in the description below here that's just, I think, 6 or 8 videos that you can watch for free to get a better understanding of what crypto really is, why it's important, and what it might mean for the future. So you can check that one out. So number 1, Bitcoin. The reason for that, it is the ultimate math formula. It is a perfect math equation that will completely distribute 21 million Bitcoins by the time of 2140. So we get to the year 2140, when I will be a pile of dust somewhere, the last Bitcoin will be created. And it's a perfect emission schedule. There's a lot of technology behind it. But what it is, it's a payment system. It's designed for us to send money back and forth without anybody saying you can or you can't do that. The only way that network would say you can't make that transaction is if you don't have Bitcoin in that account. Simple and easy. So no longer have to pay bank fees and all that other garbage that goes along with it. It is the most safe and secure of all of the cryptocurrency blockchains because it's proof of work, which is a technology that uses a lot of computing power, etc. And it's under a lot of scrutiny because of that, but it is, in my mind, the ultimate supply and demand equation. If you know there will only be 21 million of something, and demand keeps increasing, as it is, what's going to happen to the price of it over time? It's going to go up. And if we get adoption for Bitcoin on a greater level, whether that's central banks, financial institutions, or corporations keeping on their balance sheet like MicroStrategy and Tesla, then you might see a significant increase in the price of Bitcoin over time. It is, to me, digital gold, the store of value, therefore my number 1. Boom. And if you guys have comments on that, this is just my opinion. I'm not telling you to go out there and buy any of these cryptos. Do your own research. These are just ones that I have found interesting and own per my research out there. Number 2, Ethereum. Okay, Ethereum, 2014 came along. A savant, an absolute brilliant kid by the name of Vitalik Buterin. He used to play with spreadsheets. That was his game. And he used to play with Excel databases, and he came up with this idea of a decentralized computer, the Ethereum virtual machine, and basically instead of just having the store of value like Bitcoin and the ability to send money, what you ultimately would have is a programmable database that I can now write smart contracts in there. Now, some of you may not know what smart contracts are. I'll give you a real simple example. Let's say Kev, who's keeping track of our list here. Thanks, Kev. Kev, let's say Kevin and I make a bet, and we say, the weather in Miami on December 31st of this year is going to be, I say, no higher than 73 degrees. And Kev's like, I'll take that bet. I know it's going to be 78, 79, somewhere in there. So, okay, let's make a bet. In a traditional betting format, Kevin and I are going to make this bet online or via the phone or via email and say, I'll bet you $100, bro. Okay, let's do it. Well, let's say time comes around and I'm correct, and it was only 72 degrees by the end of that day, according to my watch or my Apple phone. So I call up Kevin, and Kevin doesn't answer his phone because he knows I'm trying to collect. We now have a collection problem. We also have a data problem. Kev may say, well, I looked at weather.com and it said the weather was 78 degrees. I win the bet. And I'm going, no, my iPhone said 72 degrees. I win the bet. How do we agree here? That's traditional way of doing things. A smart contract can be as simple as, in the contract, it says, I forgot what temperature I said. I think 73. If the weather is 73 degrees or less, then you pay this account. And if it's over 73 degrees, you pay that account. And that account is Kevin's, this account is Merlin's. We put in digitally, ahead of time, into the contract, $100 worth of whatever cryptocurrency we decide. So it basically just becomes a custodian, and when those conditions are met, it pays out. That is what Ethereum brought to the table, is smart contracts. And that's a very basic example of a smart contract. You guys can imagine any legal document where there's requirements to be met can be put into a smart contract. You could set up entire business models like DAOs with smart contracts and things like that, but that's a much more complex story. Robert says, did Tesla sell its Bitcoin? No, it sold some of its Bitcoin. I forgot the exact percentage. I think it's like 75% of their Bitcoin they sold. They're still holding. MicroStrategy hasn't sold theirs yet. So Ethereum, at this point, is the front runner in that space. They were the kings of smart contracts. Unfortunately, their technology is a little bit old. Now, for those of you who are geeks like me, they are transitioning right now from a proof of work network, which is what Ethereum uses. It's very energy intensive, very wasteful with regards to energy. So they're switching right now from proof of work to proof of stake, which should happen by mid-September. When that oops, that's not Bill Addis. When that happens in mid-September, I think you'll see a very nice move up in Ethereum, because so far all of the test transitions have gone perfectly smoothly, no flaws whatsoever. When they go to that, then all of a sudden Ethereum becomes much more energy efficient, and then they're going to start upgrading their network so they can get to something like 100,000 transactions per second. Now Ethereum could become the king at that point. So number 2 was Ethereum. All right, what do I got for number 3? Cosmos. So you'll hear me say a lot through here, layer 1 technologies. You just got to understand that layer 1 is what's considered the base layer. That is the foundational blockchain or the foundational database, right? All the transactions that happen for that specific network are recorded on the base layer or layer 1. The power of a layer 1 is it's where everybody goes to make their transactions. So it becomes a symbiotic relationship where the base layer is kind of dependent on everybody making transactions. But without the base layer, nobody could do any transactions or build any businesses or smart contracts on top of that layer 1. So there's this dependency on the layer 1 that become critical for growth going forward. Now, Cosmos is an interesting one because what they've done is they've created a system that allows you, through what's called an SDK, it's a software developer's kit. They built this very easy interface for you to start your business on their blockchain. So to me, really cool. You can now, in a very fast manner, transition your business to be using a layer 1 blockchain for its database storage, transactions, etc. The reason I put Cosmos up there is they've made it incredibly easy. Solana is another layer 1, which is not on my top 10. I don't think Solana is worth its salt. You saw them crash again today. They got hacked again yesterday. They're a mess, but everyone thinks Solana is the greatest thing. Maybe it is for you. It's not for me. Cosmos is much more stable, has not been, shutting down like Solana has. So Cosmos is a very easy to grow, interactive layer 1 technology. I think has a lot of promise. And one of the main reasons I have it in my portfolio is I see a lot of other companies now looking to Cosmos because of its simplicity. Escrow good for Ethereum. I'm not quite sure I understand what you mean by escrow is good for Ethereum. Give me a little bit of clarity there, Robert, and I'll answer that one for you. Next on the list, so we're to number 4. Kev, you're slipping. I didn't see you put in number 3 was Cosmos. Number 4 was Chainlink. Okay. Chainlink is what's considered an oracle. Just wasn't UST under Cosmos? No, UST was using the Terra Luna blockchain. Now, some of these stablecoins can be on different exchanges, right? They are different exchanges on different blockchains. So you'll see USDC can be on like Ethereum. It's also maybe on Cosmos and Solana, and they're doing different ones. No worries. Chainlink is something that's very different. Let's go back to that example I was talking about with the smart contract, where Kevin and I make a bet about the weather in Miami. So we've solved the problem of how we get paid because we both put the money into that smart contract and the money stays there in this quote-unquote escrow account, if you will, or custodial account, until the conditions are met. And remember, that condition for that smart contract I just used as an example was that the weather had to be under 73 or less on December 31st. Well, where do we get that information from? Right? Where do we get that data? So Kevin might say, well, I want it from this side, I want it from that side. What we can use is something like Chainlink. And what Chainlink will do is say, we will provide the data for that. So your iPhone may say something different than weather.com, but Chainlink, what they'll do is I'll try to keep it brief, they will go out and pull things like weather, but they'll use it from a variety of different sites and come up with an average, right? So you throw out the outliers and then you come up with the average temperature. Now, why is this important? Because it tells us that we have a place to go to get our data source without us bickering on what it is. Now, we can put it in the smart contract. We could say it's going to come from weather.com, or it's going to come from an Apple iPhone. Or we could just say Chainlink, and we're trusting Chainlink to come back with the temperature. So Chainlink and other oracles like it are the ones that are responsible for looking at a smart contract and going out and getting external data to fill the requirements of that smart contract. That may not seem very important. It is absolutely critical. Without oracles, smart contracts don't function, because the base layer, those layer ones, Ethereum, Cosmos, Solana, they're not responsible for going externally outside the blockchain and getting data. They're just responsible for saying, we will process the transactions and keep a record of everything, right? It reminds me of Marshawn Lynch. Marshawn Lynch was always doing interviews after the football games. He's like, I'm just here so I don't get fined. Marshawn, you had a great game today. You ran for 287 yards. I'm just here so I don't get fined, right? Oh, you don't like it? Avant, if you sleep, bro, are you saying you don't like the show? You can always leave, my friend. So the oracles become critical, and there's a whole series of different oracles that target different, what do we want to say, different types of smart contract pieces. So Chainlink is definitely high on my list. That's number 4. Number 5, Cardano. I know this is probably the most sketchy one on here, because a lot of people think that Cardano's a scam. They think it's a pump and dump. If you ever have the opportunity, go to YouTube. There's a gentleman by the name of Lex Friedman. He does a great podcast or just a YouTube channel, where he interviews a lot of really important people in the world, not just crypto, but in the world, period. I'm actually listening to the one that he does with Brian Armstrong of Coinbase right now. But he interviews Charles Hoskinson. It's a 5-hour interview. And if you listen to that and you're not a fan of Cardano, then I don't know what would convince you. To me, it's really interesting when you look at the intelligence of the guy and what he's trying to achieve. He's trying to make the world a more fair, more transparent, more efficient place, and bring everybody up to a level of competition that we all should be at. Now, most of us watching this program right now, we're privileged. We've got good jobs, we make good money, we have insurance, we've got cars, we've got houses, we've got boats, we've got all those kinds of toys and cell phones. You know, a lot of people live in poverty, and it's not designed, but it's just because they don't have access to the same things that you and I do. They don't have access to good work. They don't have access to showers and running water and clean things like that. So Cardano is actually attempting to fix a lot of that. Now, it's made and run by a bunch of academics, which means it's slow. Academics do not move fast. However, academics test things, and they keep testing and testing to make sure it works well. So Cardano is definitely my number 5. I like it. I have a pretty good position in Cardano, and I just think that ultimately they're going to be the slow horse, right? They're slow, but I think that they're going to continue to build and grow and get bigger and bigger over time. They are a layer 1 blockchain. I'll mention them as we go, because layer 1 blockchain becomes very important here. Avalanche is also a layer 1. Now, that's probably going to do it for my layer 1 blockchain, simply because I've got enough in here. Avalanche is another one. They use a fairly unique technology for their consensus algorithm to keep track of their database. They're very fast, very efficient, and they're growing very rapidly. So this is one of the newer ones that I've added to my portfolio, and I'm a fan. Hard to believe on Bitcoin after a huge pump and dump that did it's regulated, and then it will be easily manipulated. You know, it's kind of funny that you say that, Gallo. Let me really quickly show you here. You call it a pump and dump. It wasn't a pump and dump for Bitcoin. This is something that happens. It's called, one of the things we look at as traders, whether you're trading stocks, futures, options, whatever, Forex, is looking for price patterns, right? So let me go back here, and I'll go So what you're referencing is this sell-off right here in Bitcoin that went from this peak in November to this trough down here. You're like, oh my God, pump and dump, dropped 74%. It's done this multiple times. Look back here. You can go to this sell-off right here. Right? This was a 73% decline. That happened in 2019. We move forward. What about this one back here in 2017? This is regular 81% slide right there. But wait, there's more. What about this one back here that happened in 2014? We went from, $1,100 all the way down to, God, I can't get the pin, about 160. That's an 85% drop. But wait, there's more. I've already isolated at least 4 75% or greater drops in Bitcoin. So it's not a pump and dump thing. This is the nature of the beast. This is its cycles. This is how it moves. So what you learn from it is you're going to have these periods of boom and bust. And then what you'll have is a calm period for a while and then another big surge up, which is what we wait for. It's just a different dynamic of how this thing operates. Okay. Next one on my list is, it was difficult for me because I don't believe in layer 2 technologies. And let me real quickly explain what a layer 2 technology is. If you use something like Bitcoin, right? Bitcoin is slow. Bitcoin can only do about 7 transactions per second. Now, contrast that to Visa that does about 2,400 transactions per second. There's no way that Bitcoin could be the financial mechanism like Visa. It's not going to happen. A layer 2 is something that is outside. It's an external chain. They call it off-chain. And basically what they do is they will bundle transactions and report down to the layer 1 a grouping of transactions. So let's say, for example, and I'm just making this up so we can keep it real clear and easy, that every second, this Bitcoin blockchain can only handle 10 transactions, right? 10 transactions can come in. But what happens if 50 people want to make a transaction? Well, 40 of those will be left out and have to wait for the next block or the next one or the next one, depending how busy the network is. What a layer 2 like Polygon does, they sit on top and they say, we're going to aggregate all 50 of those transactions up here, and we're going to report one transaction to the base layer, that layer 1 chain. And what that does, that alleviates a lot of the base layer stress. So layer 2 technologies have become very popular. You have things like the Lightning Network, and then you have this one over here, which is called Polygon or Matic. Polygon is on the Ethereum blockchain. So Ethereum has massive bottlenecks because of NFTs and the ICOs bottlenecked it, and who knows what the next thing will be. But Ethereum got really, really slow, and Polygon attempted to fix that by offering layer 2 technologies. Now, I think that ultimately layer 2 technologies may start to go away if layer 1s get faster and more efficient. So why is it on here? Because Polygon and Matic, I think, saw that writing on the wall as well, and they've been doing all sorts of different diversification of business interests. So they're doing NFTs, they're doing gaming sites, they're doing video production. They're all of a sudden like trying to branch out in a million different ways very quickly, and I think that may keep them around much longer, especially if one of those small segments starts to take off. So Matic is my number 6. If it's not going to be like Visa, what's the hype of Bitcoin? Great question. So as I look out at the spectrum, and we're at 6, so I want to make sure I get through my 10 here. As I look at the spectrum of cryptocurrencies, I've got one that I just want to be a store of value. I want to make sure it's safe and my money is as secure as possible. That's Bitcoin. Nothing comes close. Because of the consensus mechanism, proof of work, and the decentralized marketplace of Bitcoin, nothing comes close to the safety and security. No one can shut it down. If you look at Solana, for example, technically you can shut Solana down. Not only crash it by sending too many transactions, but you can also, because it's somewhat centralized, you could potentially shut it down and seize wallets, seize assets. That defeats the whole purpose. So why Bitcoin? It will never be a Visa, but you could have Lightning Network, which sits on top of Bitcoin, and that becomes your Visa, right? So the layer 2 now becomes the one that's doing all the transactions, but just reporting it to the base layer very small, and it's still using Bitcoin's network. However, I don't think that's what's going to happen. I think there's a generational evolution of cryptos. Generation 1 was money. That's Bitcoin. Generation 2 was, hey, let's add smart contracts on it. That is Ethereum. But none of these were scalable. They're really slow systems. Number 3 is scalability, right? So for Bitcoin, 7 transactions per second. For Ethereum, does 15 transactions per second. Cardano, several hundred transactions per second. Solana, 65,000 transactions per second. So if I'm looking at which one might be the network for like a Visa transaction, Solana certainly looks like the leader. However, Solana has so many other problems I don't think it's going to work. I personally think something like EOS would be a much better option, and that's on my list, and I'll talk about that in a second. So as I'm building out my portfolio, NJ, it's a great question. I'm looking at each asset for a specific purpose. I'm not looking at all 10 of these saying, which one's going to be Visa, right? That's not important to me at all. I'm looking at it to say, which one serves needs that I believe personally need to be fixed in society. Our banking system is an absolute atrocity. Bitcoin fixes that. Bitcoin fixes the banking system. Hands down, it's easy. Ethereum creates businesses that are decentralized and removes that central control, like we see with Amazon and Facebook and Google. All those are centralized. However, now you're seeing decentralized businesses that compete with Google, that compete with Amazon, that compete with Facebook, right? You're seeing all this decentralized stuff, which gives you more freedom to the end user. To me, that's very important. I'm also looking at which one will be the transaction system down the road. You know, if you look at EOS, EOS transactions are essentially free. It's kind of a weird system. We could go, I'm not going to do it in here, but in the crypto program, we'll go deeper in that. Their transactions are free. But let's just say it's 1/10 of 1%, just so I can give you a reference. 1/10 of 1%. If you buy something with your Visa card and I buy it from your store, you are losing 3% as the seller. Why? Because as soon as I swipe my card, the companies start taking money off the top. Your bank takes money off the top. The Visa network takes money off the top. And then the depositing bank takes money off the top to the tune of 3%. So I buy a $100 item. The business owner only actually gets $97. That $3 gets sucked up into financial firms that really didn't do anything. But what if I told you you could use that same system that EOS has, make payments through EOS with 0.01% fees? Would you do it as a business owner? Why wouldn't you, right? If I'm going to save myself 2.99% per transaction as a business owner, that means my profit for the year grows exponentially because I'll get compounding on that as well. 2.99% savings, you bet. To me, that is a very important piece going, and I'll talk about that later. I'll get to some of these ones that are not on my list. So Ripple, Algo, and Stellar are not on the list. Litecoin, the silver to Bitcoin's gold. Correct. You know, Litecoin is just a fork of Bitcoin. It's 4 times the number, 4 times the speed, etc. All right, so we're on Polygon with 6. 7 is one called LivePeer. Now, this is one we just evaluated pretty in-depth in the Crypto Investor Live program, I think 2 weeks ago or last week. And I'm not going to give you the full rundown analysis, but basically what it is if you look at things like YouTube or Netflix or Hulu, they're all streaming services. And at this point, the belief is that 80% of all the content online is done by streaming. LivePeer attempts to create decentralized streaming, which is 1/50th of the cost. Imagine you're cutting your expenses by 50. That's impressive. So if I'm trying to stream a concert for my band, I can go to Amazon Web Services and pay a ton of money to stream it, or I can go to LivePeer and use a decentralized network of computers around the world to stream my product, whether those are marketing videos, live concerts, you name it, I can do that through LivePeer. To me, that's a groundbreaking, innovative technology that could disrupt the Goliaths of the industry, right? Right now, if you look at cloud computing and sharing, streaming of information, it's Google Cloud, Microsoft Azure, Amazon Web Services, and a couple of others. That's pretty much it. So to me, LivePeer I thought was a very interesting one. They certainly have some issues to overcome. I'm pretty sure that those big companies will come after them and try to shut LivePeer down. But at face value, I like the technology. It's a disruptor. LivePeer, number 7. Number 8, EOS. Yep, LPT. EOS is the ticker symbol for number 8. The reason I put this one on here, I owned it a long time ago. I bought EOS back in 2017 because they were doing over 50,000 transactions per second. And this is back when Ethereum was doing 15 transactions. So 1.5 versus 50,000. And my brain was going, EOS will be the next Visa. Now, I don't know if that's going to be the case. They have a very bad marketing department. They have technology that's superior to a lot of other blockchains, but for some reason, it's just not getting promoted. It doesn't have the venture capital money behind it, and it's not getting pushed. I do own it. I'm not buying anymore, but I think that there's a good potential for EOS to rise from the ashes, if you will, and start to do a better job of saying, hey, utilize our blockchain. We haven't gone down like Solana has. I mean, Solana's been down 9 or 10 times this year where the entire network shuts down. EOS, goose egg, 0, stable. That was EOS. Number 9, Helium Network. Okay, here's another disruptor. You look at things like Verizon, AT&T, and Cricket Cellular, and all these ones. They're all trying to get you, your 5G service, or even Internet of Things, which is allowing electronic devices to compete with to communicate with each other. For example, I believe in 5 years we will have a refrigerator that when you come home, you'll open it and you'll be like, oh, I got to order eggs, but the eggs are already on the way because your fridge ordered it. Right? Your fridge will look at your milk and go, oh, he's got like 2 glasses of milk left. I'm just going to automatically go to whatever grocery store I'm connected to and order milk and eggs and all the things. So your fridge is constantly stacked and you don't ever have to think about it. That's called Internet of Things, letting these devices communicate to each other, where the dishwasher will now communicate that it's running low on fluid, or your coffee maker's like, hey, I've only got 2 cups left, better order some more. HNT, I think, is interesting. It just has a lot of obstacles. And basically what you can do is you can buy an HNT miner. It's like a little box, and hang it on the side of your house. And you can now be part of the network and earn money, earn HNT tokens for being a part of that network. It's a decentralized digital web, if you will. Now, right now, it's not like, it's not a fiber optic network or anything like that. It doesn't have super high speed transactions. But the bigger that it gets, the more we can utilize this network and plug into it. And they're already rolling out 5G routers for houses, which means now that's a huge threat to a lot of these telecommunications companies. And I can maybe get my phone service much cheaper just by using a decentralized network, right? Very innovative and potentially extremely disruptive for the markets going forward. And finally, what did I have here? Oh, that was it. That was 10, right? Yep, EOS, LivePeer, Avalanche, Cardano, Chainlink. Yep, that was 10. So I guess we got our numbers out of sync. Sorry. Helium was 10. EOS is 9. LivePeer is 8. Polygon was 7. Avalanche is 6. Cardano is 5. Link is 4. Cosmos is 3. Ethereum was 2. Bitcoin, number 1. There you go. So, KF, that was for you. NJ says Ripple. I got Daniel saying Algorand and Stellar. I actually really like Algorand. Silvio Mercalli, I believe he's is he a Harvard professor? MIT professor? I think it might be MIT. I'm not sure which one you missed there, but we'll fix it. Silvio Mercalli, one of the brighter minds in the crypto space, and I actually put him on. Oh yeah, ticker symbol for Avalanche is AVAX for those who might want to know. I watched an interview with him recently, and just a brilliant mind and understanding kind of what he's trying to build with Algorand. So I do own some Algorand, but again, it doesn't have the financial backing. With a lot of these, you could have the most brilliant idea in the world, but if you don't have marketing and you're not getting your product out there so people can see it, and you're not getting utilization or adoption, then it's probably not going to go anywhere. Now, there is another project out there that, to me, has huge potential. I look at this, I'm like, wow, this would be epic. But I don't think it's going to go anywhere because people don't know about it. It's called the Secret Network. Secret Network is not a privacy coin. It's not saying you can't follow the transactions. It's saying that the information in the smart contracts is secret and private. So if I'm doing business transactions with somebody and I have proprietary information in that smart contract, right now anybody can see it. With Secret, can't see it, but their network is not getting used. So I'm not buying any until it starts to get some adoption. Let's see, what was the other one there? Ripple. I think Ripple's done. I think Ripple got caught up too much in the SEC lawsuit. Still not done. And because of that, Stellar is kind of taking over what Ripple wanted to achieve, which is being this cross-border payment system. That's now their push. I think Stellar looked at it and said, oh, wait a minute. Ripple's now grounded. We'll take over for that. So if I had to choose between Ripple and Stellar, no question, I would take Stellar. Polkadot, very similar to what I think is with EOS. EOS can do a ton of transactions per second, but it doesn't have good marketing. Polkadot is designed to let other networks communicate together. It's kind of like the round table, right? We can all sit at the table and communicate regardless of our programming language. Polkadot attempts to achieve that. However, again, they don't have good marketing. I don't see them out there pushing. Cosmos and Polkadot to me are extremely similar, but Cosmos has way better marketing, way better visibility, and a much easier interface with regards to the SDK, which is the software development package. So to me, there you go. How do you feel about VET? Love it. Actually, it was one I was debating trying to find one to put that on the list. VET is VeChain. VeChain is a supply chain blockchain. It's designed to track goods and services or immunizations or things like that. And I think there's a tremendous market share for that. Not a fan of Aave. I just don't see them being that big and down the road. Yeah. Merlin, is it truth for each $100 long on any tech stock, hedge fund, short 25? I don't know about that, Gallo. I haven't heard that. Department of Oh, no. Department of Transportation, no. Dot is Polkadot. Polkadot is DOT. I do have a bunch of Polkadot. I stake it actively, but I'm starting to lose faith in it. It really feels like it just petered out. They were doing so well, and then, they were doing these parachain auctions, and that was going well, and now all of a sudden it's kind of fizzled out, and I don't see adoption happening on Polkadot. All right, I am sweating like a beast up here. Let me get to the markets here since I finally covered our things. I'm all right with Gala. It's not high on my list. I don't own any. I don't everything here that I showed you. Let me just real quickly run through this list. Helium is the only one on this list I don't own. I've got EOS, I've got LivePeer, I've got Polygon, I've got Avalanche, Cardano, Chainlink, Cosmos, Ethereum, and a bunch of Bitcoin. So those are obviously some of my top holdings, but this is only 10. I've got 29 other ones out there that, I'm hoping, might achieve greatness someday. Let me run through our markets just because I got to get through that stuff. I know this is supposed to be a trading show, so let me, and before I just lose 35 pounds sweating over here. Let's start with the main stuff here, which is the economic announcements for today. Most of this stuff came in line with expectations, looked pretty good. The interesting one was looking at the retail sales number decline for Europe. I mean, it's weird because you would think that with the euro falling as much as it is, that their retail sales numbers might actually be increasing. That's kind of an ominous side. The euro's just been plummeting. I mean, we hit parity, and their retail sales numbers are actually declining as well. They expected it to be unchanged at 0. Came out at negative 1.2. Other than that, for the U.S., we had a very promising factory orders number too. They were expecting a decline to go from 1.8 to 1.3%. All of a sudden, we came out at 2. So we weren't declining. We're actually getting better on factory orders. That's good, especially in light of some of the negative news you're hearing about inventories and stacking up products and services. You couple that with the fact we had crude oil inventories much higher today, meaning we are now seeing more oil staying here stateside. Well, what does that mean? Well, that means you saw crude oil tank today. Why? Well, because you got so much more supply. The interesting part about crude oil is where we're at. Right, I had this line drawn here right around 93.60. To me, that was a pretty big line in the sand. We fell real quick, and we were right at the lowest point, which goes back to July 14th. Again, I think that if this continues on down, you could be I don't think we'll get down to these $70 mark, but it certainly becomes in play from a trend perspective, especially if we start to see issues with the dollar. So that was your worst performer, down 3.71%. Gold taking a little bit of a dip, continuing from that retracement to this blue downward trend line here. Popped up, hit it, now shooting back down. It was down 0.42% today to 1782. Moving on up, Dow. Dow was doing great yesterday from this overhead supply level, sold off, and then we had a nice recovery today, up 1.2% to 32,754. Russell, the one that I was just about to pull the trigger on some puts today, but I decided to hold off on that. Russell's at 1909 right now. It was up 1.41%. You can see coming right into this area of supply from back in June 6th and June 7th. Now, the S&P, the one that I bought some puts on today, the only reason I bought some puts is because we're deeper in this zone. I bought those on SPY. My stop loss, and I have a stop loss in place, as you should always have, is 418. So if the SPY gets to 418, I'll just dump it and take a small little loss, be a few $100. But right now I have 20 put options on the S&P, just basically looking at that overhead supply level as we speak. But I'm definitely going counter trend. It is a very high risk trade. S&P was up 1.44% today, closing at 41.52. And the last two, our silver medalist is the gold Bitcoin. Now, it really didn't do much, up 1.8% to 23,415. The good news is we're staying above this 22.8. You guys can see I got this red line right here, which is the top of that yellow box. We want to see this stair step up. I'd like to see some more upside movement, break some highs from the last Friday's price. Is that Friday? Yeah. Friday's closing price, which was a high of 24.6. Now we can get above that. I think you start to really seriously look at closing this gap and getting all the way back up to somewhere right around 29,000 for Bitcoin, which would be great for the entire crypto space. And finally, the big dog, NASDAQ. not only do we not hover at that overhead supply, we rip through it, which means you're probably going to be challenging these levels right around 13,500 in the next couple of days if this momentum keeps up. So looking pretty darn good here for the NASDAQ overall. You guys might remember yesterday we were doing HKD. This just joke of a stock is down 34% today. Exactly what I thought would happen. And my guess is we'll see it drop even more and more. I mean, it hit an intraday high of 2,100 and an intraday low of 975. So you have a $1,200 swing in this thing in intraday. That is just absolutely insane. Right now it's trading at 1,100, and in the after hours it's actually up 12% again. This thing is just nuts. I highly recommend you stay away from it and leave it alone. Do not touch this thing. It is pure gambling garbage. All right, let me see how much time I got so I can get maybe to a couple listener questions here. I know I've got too many things to do, and I spent a lot of time going over my top 10 list for crypto, which probably bored a lot of you. I know a lot of you aren't into crypto, but we mix things up here. Tomorrow we're going to talk pretty much about commodities almost all day with the show with Don Dawson tomorrow. I'm going to look forward to that. Mario, Coinbase jumped 20% today. Could be before the dump when the earnings come out on September 8th. Can you take a look? Yeah. I'm bummed because I want to own Coinbase. I want to. I just haven't been able to pull the trigger just because the trend has been so aggressively down. But, I mean, it's already up huge. Look at the move on Coinbase over the past couple of weeks. I mean, we were down at $45 back here on June 30th, and now we're at $80. I mean, it's almost 100% gain in a month. Love it. Now, I've got these lines drawn. Really, for me, the line in the sand is where we're at right now. If we break above this 83 and change, it's this high point from back on May 31st. If we break that 83.30 mark, you've got gaps that need to be filled, and maybe the 120 starts to look very appealing. So I like this. It's been making higher lows. All right, it based for 2 months straight with all that garbage, and basically Jim Cramer now says it's trash and he hates it, which means it's going to go up. All right, Jim Cramer was the kiss of death for this thing. He said he wanted it. We like it at $4.95, and then it sold all the way down. And then all of a sudden, Jim Cramer goes, "Oh, well, I knew this was going to happen." You clown. Here's my donkey of the day. We don't do this too much, but the donkey of the day is clear. It shouldn't be the donkey of the day. It should be donkey of the decade. Is James Cramer. I mean, this guy is the most inverse trading person you could possibly imagine. Just do the opposite of what he says on a regular basis, and you'll be fine. There was a funny one that came out for Apple. Jim Cramer said something like, "I really like Apple right now. It looks strong." And this guy posted, "There's the kiss of death for Apple." Or, Tim Cook right now, and they show this guy all angry, screaming because now you put the hex on Apple. Anyway. Cool, Liz. I'm glad you enjoyed that one. I didn't want to go too in-depth. Obviously, I go much more into detail in the Crypto Investor Live program. Again, for anybody who is into crypto and would like to know more about it, there's a link down below that gives 6 free videos. Again, they're very basic. So a lot of people just don't know about crypto. But learn the basics, why it's important, the evolution of money, things like that. If you are interested, we have a 43-lesson course. It's all self-paced. That is done before Online Trading Academy, and you can find out more information through that link. I also, with the Digital Assets program, I do 2 1-hour sessions a month where it's just open Q&A, and we can just go into anything we want. And then, of course, the higher level would be Crypto Investor Live, which Cameron and I do Tuesday nights and Thursday mornings. So it's 4 hours a week, and plus all kinds of other good, cool stuff. Must be hard to be married to Jim Cramer. Yeah, I'm pretty sure that the financial aspect helps with that a little bit. Cramer is only a donkey on days and all right, let me real quickly get to this question from Naomi. He says, if mortgage rates are starting to fall, why is property value also falling? There is a shortage of housing for sale. That's changing as we speak. So that was the narrative for the past year was, there's not enough inventory. Now what you're seeing is inventory starting to pile up. As markets really rip up, right, everyone is wanting to buy and hold on to those stocks. And as I give this example, Naum and others, I want you just to think of the equity markets, but it's exact parallel to the housing market. So let's say a stock is on a huge tear. It's just been running and running and running, and you're like, I got to buy into this. So you finally buy into it. Like, yeah, I'm making money, you buy some more. Yeah, I'm making money, you buy some more. Most retail investors aren't going to just dump those stocks, right? It's going to slow down. And all of a sudden, there's nobody left to push it up. And then it slowly starts to roll over. And that's when people start to dump. But when it starts to fall, nobody wants to buy it anymore. Housing market's relatively similar. You had a very low inventory number for housing. And you had cheap money, which caused a huge bull market run. Now all of a sudden, our 30-year fixed rate mortgages has gone from under 3% to, it was over 6, now you're mid 5s. That's still, let's call it 2x. So people who could qualify for a 30-year fixed rate mortgage at 3% are not going to may not qualify right now. So what does that mean? Well, that means that people who have been bidding on homes to buy them now might not qualify, and they're not getting approved. And that's what you're seeing is a record number of deals are falling apart because of the lending side of it. So now what happens? You have all these other people that go, oh shoot, housing market's rolling over, it's a good time to sell. Now you'll start to get a flood of houses on the market. More are coming online because people just can't buy them. Just the statistics behind qualifying for a loan will not allow more people to buy homes. So you'll start to see that roll over, and now what you're seeing is people lowering prices, lowering their prices, and ultimately what will happen is the housing market will decline significantly. How much? 20%, 30%? I don't know. I have no idea. I'm not that kind of forecaster. However, that's part of the reason. So mortgage rates have fallen a little bit, but it's still much higher than they were back in November and December and even July of last year. So it's choking out the housing market. Plus layoffs going on abound. You saw there's so much new news about more layoffs going in. $900 million worth of spending cutbacks over at PayPal is starting to impact people. It starts to incrementally pile up and paint for a worse picture economically going forward. So Raman, I'm just going to read this one since you sent it in. I like giving people props. He says, I'm in Toronto from where Ethereum and Elon Musk started their journey. Not sure on crypto trading and some restrictions in Ontario yet. There are restrictions in Canada. It's a bit tricky up there with regards to what you can and cannot do. Heard on one of your videos about the crypto courses you conduct. Yep, Raman, just look at the link down below this description in this video. You'll see it says free crypto class. You'll find out more information there, and you can always ask more questions here on the show, and I can answer those for you. Let's see. Leonid. Make sure I don't go too long here. I'm going to finish this one up and then we'll wrap up the day. Leonid, great question. In your opinion, isn't good economic data and earnings bad for markets right now? Good news equals more possibility of rate hikes equals more pain ahead. I remember when we were at times of quantitative easing era, when good news equals strong market sell-offs. I don't know if this scenario is present today. Well, look, if we keep getting good economic data, let's say, good economic data, so let's say GDP starts to level out and starts to get positive again. Let's say inflation starts to decline a little bit and jobs stay right where they're at. That would be good economic data. If that scenario persisted, what would the Fed do? The Fed would stop unwinding their balance. Actually, they would continue to unwind the balance sheet, but they would no longer need to keep pumping money into the market. If good economic data came in, they could keep rates right where it's at, especially with inflation. Inflation's the key. They're raising rates to fight inflation. If we had low inflation, the Fed would be happy keeping rates low. The real impact there, the real key is the inflation side of things. So I don't necessarily look at good news as bad news for the markets, etc. I look at how it is relevant right now. And I think what you'll see is because of Jerome Powell's comments about FOMC and the Fed funds rates last Wednesday, what happened there was Powell made it seem like the economy was looking better, and therefore they may not raise 75 basis points. Because of that, the market just went nuts and everybody started buying because, we're all out of the woods. Well, you and I know that we're not out of the woods. It's just gotten a little clearer with regards to where we may be going. It could certainly come back down here with some bad economic data spikes. We are still seeing inflation rise. We're still seeing our GDP decline, and unemployment numbers are starting to increase. So you can't let Jerome Powell's optimism convince you otherwise. And the reason I say that is I'm not so concerned about the good news or bad news. I'm looking at how does this play for the picture of the market going forward. And I might be wrong with regards to my timing, but I think I'm correct long term. I do think you're going to see further downward pain in the market at some point because a lot of factors are rolling over right now. And remember, I'm not just looking at 1 point data. I'm looking at the housing data, I'm looking at GDP data, I'm looking at CPI and PPI data, I'm looking at all the jobs data, which we have 2 more announcements coming out this week. All of that starts to paint that picture of troubles ahead, especially with rising interest rates, right? Unwinding of the balance sheets, removing money supply, demand for the dollar strength. All of that just paints a negative picture for the market. So at this point, I'm kind of like a hold type of attitude. We're in a big market rally right now, which I thought was overdue. I mentioned that a couple weeks ago, or like, look, we are due for a rally here because optimism has become so bearish. And now all of a sudden, I think that's flipping. Let's see, do I have any other ones? I think that's going to cover it. Let me do economic analysis for tomorrow. Here's your economic calendar. Huge day. Now, for those of you who are interested, obviously the British pound is going to be reporting their rate announcement tomorrow. That's going to be at 4 a.m. Pacific time. Everyone's expecting it to be a 50 basis point increase. No shock there from 125 to 1.75. You know, the pound has been on a pretty aggressive slide. Here is the chart of the British pound against the US dollar. It's not been pretty. You know, you go back into June of last year, we were up around the 142 mark. Well, now we're at 121. That's significant for a currency to drop that much. And, you know, who knows? To me, it looks like if I look at this and forget that this is the British pound, I just say this is a chart of something, tells me that we're in a downtrend, we're retracing back onto overhead supply, and now we're going to come back and challenge this 118 mark. Now, that would be just straight technical analysis on this. For me, really want to wait and see what that announcement is tomorrow. That'll happen, you know, before the market opens out here in California, 2.5 hours before the market's open. But if you're trading the British pound, that could create some big waves there. For the U.S., you can see we do have some unemployment claims numbers coming out. They're expecting those to increase. No shocker there. We have trade balance and natural gas storage numbers, and that's pretty much it for the U.S. As far as international markets, you see a lot of smaller announcements happening for the euro and Japan, but nothing there that's absolutely groundbreaking. Now, on the earnings front, you do have some big names. Alibaba, you've got Square or Block, Twilo, Abiomed, Amgen, Westrock, Eli Lilly, and Duke Energy reporting earnings tomorrow. Some nice pharmaceutical companies reporting, and I'm not a big drug company guy, so I couldn't tell you what that's going to be or my expectation, but just letting you know that stuff is coming out with earnings tomorrow. Now, I'm sweating up here. Tomorrow's show will be with Don Dawson. For those of you who may not know, Don Dawson teaches for Online Trading Academy. Actually teaches for Kansas City's Online Trading Academy. Does commodities, and one of the brightest minds I know with regards to commodities. So I'm really looking forward to having Don on the program tomorrow. What I'm going to do is I'm just going to talk about the overall landscape of commodities, understand maybe why we've seen such dramatic sell-offs over the past 4 or 5 months. And then maybe we'll dive into some specific ones. So if there's specific things you want me to ask Don for tomorrow's show, do me a favor, put those down below the YouTube video. Just go to today's show, comment down below, say, hey, ask Don this. I want to know about wheat, corn, soybeans, whatever. Let me know, and we'll ask Don those questions tomorrow. But for those of you who might be new to commodities, it could be a little overwhelming. Don is a brilliant mind, and his main focus is just commodities. So I'll do my best to kind of keep it at a basic level. But knowing me, I'm going to try to dive deeper because I have questions for Don. All right, everybody, that's going to do it for me for today. Hope you enjoyed it. KF, thank you for the question about cryptocurrencies. I hope that that 10 that I did just gives you some food for thought. You know, again, I'm looking to hold those for 5 years or more. And Bitcoin I'm going to hold for much longer. I'm not really, I'm not worried about it in the short term if it moves up and down. Did I answer Lisa? Let's see. Merlin, I had to step away for a moment. Did you answer my question about Sailor? I didn't answer it. It's one of those things that I think that people might be relieved that Michael Saylor's stepping down, so they might actually be able to focus on normal business operations, but I didn't dive into any of the column opinions about it. I still am not sure how that's going to impact MicroStrategy. My guess would be that MicroStrategy will start selling off some of that Bitcoin, which could hurt crypto. You know, I think that Michael Saylor was very intelligent and smart with what he did. In the long haul, Bitcoin's most likely will go up just because of supply and demand. But his timing was wrong. And if Bitcoin baseline's where it's at, it kind of feels like we are right now, then MicroStrategy will probably hold on to that. If Bitcoin has a big rally, you know, all of a sudden everyone's going to he'll look like a king and probably get brought back. But don't know the reasons, circumstances why. He's probably getting too much heat for it. Now he's got enough Bitcoin himself, he can just walk away from it all. So anyway, I'll maybe dive into that on the Friday show, but we're going to focus on commodities for Thursday. If you have questions, put them down below the YouTube video, or you can email me at TraderMerlin@gmail.com. If you got new people, if you're new, hit that subscribe button, click the little alert bell so you know when the shows are live, and I will see everybody on tomorrow's show. Take care.